Hey everyone, Trader Tim here from eminimind.com, and these videos are designed to help you improve your trading so that you can become financially free and live the lifestyle that you want. Today is Monday the 22nd of July, so that means we're doing another Monday market analysis video, starting off with the E-mini S&P. And on the daily chart on the left here, you can see I've got this channel highlighted, and it's a pretty nice clean channel. I'm going to get rid of the channel lines, but just keep that in mind. If I get rid of everything here, you can really see a very clean series of higher highs and higher lows. And that structure, pulling back, rallying to a new high, pulling back to sort of sitting on top of the prior highs. That's a very healthy structure that gives us a lot of support on the way back down. Now, if I put back that retracement long that I had drawn up, we haven't quite touched that 2970, but at the same time, Friday's price action, this big body bearish gap up and sell off day, well, the gap up actually moved above the 61.8 of the short. But then we ended up selling off, coming back below the 50% retracement, and kind of on our way to this 2970. So I'm leaving it up just because I want to make sure I'm reminding myself that we're sort of in between two 50% at this point. And noting Friday's low, a 2976.50, I want to keep that in front of me here, and as well as Thursday's low, which is just below that, another point, 75.75. If we break those lows, then coming down to 29.69.75 should be a piece of cake. That's not very much further. And if I go to the left and find the most recent swing low, that will be over here at 65.75. So one scenario is to sort of move lower in the next day or two and put in maybe this kind of a candlestick where we open up inside of yesterday's range, but then move lower in a trending fashion pretty quickly and take out some of these lows, but then later in the day rally and close somewhere around the 2970. There's things are still looking pretty bullish, and we do have a Fed meeting a week from Wednesday where, as of right now, it's looking like they're expecting to cut rates, and they're not really looking to shake up and stir the pot. So, with earnings season being upon us, we do have a bigger risk of seeing more gaps through the next couple of weeks, so keep that in mind. But also, the Fed is going to react in sort of a conservative way to keep the market going well. So if all of a sudden there's a bunch of earnings announcements that are really bad, I would definitely expect a rate cut. And if things sort of continue as they are, the Fed also is showing expectations of a rate cut. So kind of a lot of potential for us to shake off some of these earnings announcements if they do miss expectations, and for us to move higher. That being said, we always want to know where the failure point or the 61.8 is of this daily long, and it's a 29.57. So watch out for that. If we do come down and break that level, then I would draw from highs to lows and look at how we trade at that 50% short. But as of right now, things are looking all right. Let's see, before I go over to a couple swing trades, let's talk about today, intraday. There was a nice triple top at about the first 30-minute mark. I wasn't able to get into a short up here. I was trying, but the market didn't pull back on me. But what I did do, here's a larger short that's set up at about the hour 10 mark. And then it didn't really, again, give any sort of follow-up short. But the second retracement after breaking lows of the day. We didn't break yesterday's low, but we were sort of starting to form this a little bit more sustained downtrend. Over here, after the larger short traded, and after we broke the opposing 61.8 here, as well as the prior swing low, we did set up in a really nice short. It got a first target, but unfortunately didn't get a lot of follow through. So a nice little setup here, lining up at the underside of the first 30-minute range, just following the larger short. Moved down quickly, a couple of points, but then kind of got a little bit of a double bottom, and then we reversed and went higher. So it's always nice to have a smaller first target on a small portion of your position so that you can reduce your risk in a drastic way for trades like that. It's a great setup. Take setups like that all the time, and sometimes they end up being big home runs, but you're not really swinging for a home run. If it happens, great. But to protect yourself, taking a smaller 2-point profit on the ES in this case is a good way to help combat some of that. I do want to move over to a particular swing trade. I did a video or a webinar last week, and you can find that right on the homepage, emoneymind.com. I'll put the link below, and you can watch the recording. It's all about my swing trading style and kind of the setups that I use, or the setup that I use. And I've been basically trading this same way for 12 years. And the setup here on Home Depot for a swing trade, what was this, last week, 2 weeks ago. I'm looking to buy strong stocks on pullbacks, looking to sell weak stocks on bounces. And here in Home Depot, we were sort of in this rising wedge. Had a pullback with a nice little hammer, just getting long above the high of that bar. And then as we move higher, trailing my stop below each daily bar. This was a pretty quick move up, 10 bucks or so. And the entry candle itself was only about $2.50. So by trailing each daily low until over here where we break this little hanging man, now I can lock profit in very quickly without giving too much back. And same thing like I mentioned on the intraday trading. You can, a lot of times what I do is use multiple trail stops. So use an aggressive one that gets me out up here, but then also let the market breathe a little bit and pull back and then rally into a new high, and then you can put your stop below that next swing low. And so if you get a situation like this one back here where here's a hammer, you had a nice a little bit of a pullback, but we were very close to highs still, and you get long, market rallies, kind of moves sideways, rallies again, pulls back. All of these, every time the market makes a new high, you can take your stop from underneath the swing low, move it up underneath the next swing low, and that keeps you in these moves for sometimes a month at a time or more, and you don't have to be getting in and out of the trade over and over again very frequently. And so when you pair swing trading with day trading, it really helps smooth out the P&L curve, I've found. So that's just kind of an example of one of the setups that you'll find in that video over at emoneymind.com on swing trading. So I hope everyone has a great week. We'll be doing live trading again tomorrow morning, every Tuesday each week, and you can check that out at emoneymind.com/VIP. Thanks everyone, and have a good one.